this is when you see them like this, those are going to be areas that you also want to pay attention to. Why? Because these gaps act as an area of liquidity also, because these are areas in price that they need to rebalance from.
At the end is going to be the video breakdown for the US30 trade. It's going to be about 10 minutes at the end. I did it with one of my one-on-ones, so check that out. We here again. We're trying to see if we can get that same opportunity, but now it aligns with that 10 o'clock news that I was talking about. So if we could run this low, previous day's low at 10 o'clock, that would be my ideal bullish move. And if I'm wrong, then at least I'll know that more than likely we're bearish. But if I lose this trade and it ends up pushing, I can't even get mad at it. This range is cooked. It's cooked bad. Cooked bad. Look at my man Kino. Look where he got stopped out. If he got stopped out right here, ain't nobody safe, bruh. Ain't nobody safe. Nobody's safe. What we gonna say? Only time will tell. Okay, so this is how I ended the day. Overall, so London session trades, I had 2 break-evens, and then I took 2 trades during London session that ended up being a loss. And then during the New York session, I took 1 trade that ended up just cutting at break-even, necessarily because just the conditions weren't the best today, if I'm being honest. So I just took it with what it was. So overall, 1.6 negative for the day, when yesterday I did have a 2.4% gain, and I gave most of it back. So I'm up about maybe 0.8% from the total from this week's gains. But overall, I think we're gonna still end up profitable for the most part. Just gonna end it here for the day. Come back tomorrow, fresh London session, see what's up. But yeah, not every day's gonna be winner. Just gotta maintain and be able to handle the losses and come back for the winners. All right, I'm looking at potential NAS 100 longs right now. These look a little bit more risky compared to other trades I do take, but what I'm looking at is the fact that we ran the short-term low and we're coming into the 50% of this Asian range at 3 a.m. And we also have this 15-minute fair value gap that price traded into. Ideally, I'm just looking for price to run this Asian session high. That is my main target, this Asian range high. I just want to see that liquidity drawn. I'm just looking for a 1 to 2. Nothing crazy, but if this trade does start to slowly go against me, I will think about cutting half of it off at about 50% of the stop loss. So we'll see. Looking just to get a nice 1 to 2. I'm about to journal the trade and we're gonna see what's up. But DXY is overall bearish for the most part. That's why I do think we should get some bullishness, but only time will tell. Right now, I'm pretty sure US30 is pushing. So we'll see if we can get a similar reaction. If not, then we'll be back another day or just New York session. But I'll come back if it plays out. If it doesn't, you'll see me soon. One thing that I did just notice that does give me also a little bit more clarity is how equal these highs are. Over here, if you see how equal these highs, those are things that I really like to look for a price to reach for and target liquidity wise, just because it's too flat, too even. It just looks too easily to get ran. So even though I am in some drawdown right now, I'm just trusting the setup. You know, all it takes is a few candles to play out. So I'm just gonna trust the process and trust the 3 a.m. hour candle. We're gonna see what's up. This is the target. After a long, stressful day, you can see so far this challenge is really 50%. We've really just been up and down, up and down, up and down, up and down. Today's profit overall, 1.5%. But if you were to check the analytics and everything, let me see. If you were to check the analytics from today, just by itself, I took 3 trades, 2 losses, 1 win. And as you can see, the win was significantly bigger than the losses, and that's all you have to do. I'm still holding this runner also on 30 just to kind of capitalize on the move. But overall, today's profit 1.5%. Consistency scores at 80% right now. Minimum trading days 8 out of the 10, and all the risk parameters still remaining in it. I'm up 2.3%. Average profit is $671. Average loss is $540. I do want to try to get this to at least 1,000 just to make it that 1-to-2 ratio. Win rate 51.85. And here you can see the big trade right there. It was only about 37 minutes, and it was holding the same lot size as anything else, just bigger move in my opinion. It was about a 1-to-3, but I just want to show you all of this. And we still got until May 16th, so still got time. Slowly but surely get into the target.
Where I'm trying to go, sometimes I don't even know. Mentally I'm broke, sometimes I don't even show. I be planting seeds, sometimes I don't see them growing. I was supposed to leave, gave up, and I never spoke it. Caught a Fed case, then lost my nigga, got me back total. I'm like, fuck niggas, but heart so big, it got me wide open. Scared to leave my energy with my kids, got me outside rolling. Comparing the shit I'm doing with what I did, it got me back smoking. What's my destiny? I know it. Will I fulfill it? Shit, I'm hoping. It's my passion, and I know it. Tell you I'm doing it, but I'm coping. All this money don't mean nothing. Pass out hundreds like they tokens. In my future, I can't control it.
So we have the Asian session high, previous day's high, previous day's low, all in here. We have the 12 a.m. and this is showing everything from here. So how did I catch this trade? So let's look at it before all of this happened. Right when I was looking to take the trade, what was I looking at? So before I took the trade on here, this is what price looked like. So overall, what did I know at this point? What is the one thing I tell you? If you ever really want to understand what the trend is, just look at the past day or two. You don't ever gotta go too far back, because one thing you gotta want to know, it comes down to probabilities at the end of the day. So you see how after one candle, there's usually a follow-up of that same candle. So one down candle, two down candle, 3, 4, 5, one up candle, two up candle, one down, another down, one up, another up. Do you see what I mean when I say there's usually another one afterwards? Just because that's just how the market goes. When it starts going in one direction, it's just simple. So if you see one up candle, the likelihood of the next candle also being an up candle is more likely than the next one to be the down candle. So that's just a simple way of doing this. So now with that understanding, you can use that on lower time frames, but it's best used on higher time frames, such as the daily. So if you see that yesterday was a down day, the likelihood of tomorrow being a down day is more likely than it being an up day. That doesn't mean it's 100% going to happen. You just want to know what's the best probabilities of that happening.
Right.
So remember also last time when we were talking on how you can actively use the fair value gap when it's actually moving. So say you always want to look at the 3 candles, right? And the gap in between is going to be the fair value gap.
Right.
Remember when I was talking about how you could actively use it? So when that third candle is moving, you can wait for it to go into it in that time.
Like a trend.
So like right here, where would you say the fair value gap is? From over
I would
here.
say like between the blue. You talking about them? They could be mixing colors.
Right. Yeah. It
They
just
could be
depends
bearish
on the
and
wicks.
bullish.
It just depends on the wicks in a sense.
Oh, okay. Oh, okay.
So right here
I
would
thought
be.
they all had to be.
So let me go back. So in this time, when this candle right here, we had that gap. I'm gonna make it. I'm gonna just make it. Green. You can't really see. I'll make it just black. So the down wick right here, this would be the high of the fair value gap that's formed as of right now. Why? Because on that third candle, let me get rid of this. But on that third candle that's about to form, we know that there is a now gap in between. So now if I go, let me go slowly. So now when this candle opens, and whenever price goes, you can use that area as a potential trade if this candle goes into it at some point. There's going to be times where this wick isn't going to go into it. It's just going to keep going lower. But then if this never went into it, that would have been a gap left there for another time. But in this is how you would use it actively moving. But now with that understanding, when price was all the way over here, so like I said, before any of this happened, that daily fair value gap, if you go in the lower time frame, was right here.
Mhm.
And so right when price was coming down, where'd my markups go? Is it over here? Nope. Okay. I don't know where the Asian range went. Let me put it back. So right here we have the Asian range again. So what was happening? I seen that the Asian range high. What do we know that's above and below the Asian range high?
Liquidity.
Liquidity. So what does liquidity necessarily mean? There's a lot of orders there. When there's a lot of orders, there's going to be a lot of times where price has a move like this where it will make a high or low, but then before it has this real move, it'll do something like this and have a break of that high. So when everyone thought it was going to fall the first time, runs their stop losses and then falls. So that's what it was doing over here. It was basically tricking
Yeah.
people because you got to understand the market's not meant for people to make money. It's meant for people to lose. So you can see right here, it ran the high, had a reaction, right? It ran this high, came down, but it never kept going lower. It just fell a little bit and then came back higher. To do what? Because all it was doing was it was just making more liquidity right here. Now, since it made a high right here also, just more liquidity. When there's more liquidity, there's more orders. So then what happened?
Right.
At what time? Guess what time this happened right here? This next candle, when it came into that daily fair value gap, what time do you think that was?
It's 9:30.
9:15 going into 9:30. Yeah. So this move kind of happened a little bit early going into it, but honestly, I thought it happened at 9:30. Let me see. And I know I had gotten the trade when it came to that daily fair value gap right up here.
Mhm.
So here I can even show you on the screen because I could actually show the MetaTrader. I'm still in the trade, so I could show you here. You can see it.
Yeah.
So this is the trade right here. I'm on the 15-minute. If I go to the hour, when it ran all those highs, that's where I was selling. So where everyone else was trying to buy the breakouts, all of their stop losses sitting above here. See how it looks so clean?
Mhm.
It came up with that one candle, and boom. And now you can see overall still going lower. And then I'll take it back over here again. But I was just wanting to show you that the actual trade. So now if you come back over here, when it ran above these highs, that's when I entered my position. I was risking, I think, 50 points. So on a 0.01, that would be $50. On a 0.10, that would be $500. It just depends on whatever the lot size is. The lot size at the end of the day is going to be the multiplier. That's going to depend on how much you make and how much you want to risk. So where was I targeting? Ideally, if I wanted to see this full move play out, this would be a New York reversal. Why? Because the high of the day is being made at 9:30, 9 o'clock New York session. And we ran all these highs. And also, the day before was bearish. It was lower. So what does that mean? The likelihood of today also being a down day just is more likely than unlikely. Doesn't mean that today's not going to go any higher. It definitely can. But it just comes down to probabilities. I would rather be on the side that is more, that has a higher chance of winning. You just want to put your money behind high probability because at the end of the day, we aren't 100% sure something's going to happen. We just believe in something enough to put money behind it more. Just the confidence. So I was risking about 50 points and I was targeting this low down here because I knew that if we could run this low, more than likely the trend is going to be right and that could be the high of the day. And then I should be on the right side of the trade. And that also was going to give me a 1 to 2.7. So if I risk $1, I would have made $2.75. If I would have risked 100, I would have made 275. If I risk 1,000, that. And then for me, I think I took most of my trade out at like 3.4. So it ran even lower. So right here, I'll just show you what started happening. We had a wick come all the way up, but look where that wick went into. Pay attention. That wick at what time?
9:30.
Into where? What is this line right here?
That's from
The
previous
daily.
day.
That's the daily fair value gap that was right here that we were talking about.
Okay.
So that daily fair value gap with 9:30, so time, price, yesterday was bearish. You would rather sell, and you were running all the highs. So even if this was wrong, you would have had a great probability because you were buying above old highs that we sold. So we ran all these highs. Yesterday was bearish. We have the daily fair value gap, and now it's aligning with time. So now we're doing it at a good time. And then what do we know about time? Time just has volume. And why do we want volume? Because it means a trade could play out fast. And you can see, look at the strong rejection it had. When you see a big wick like this, what does that mean?
We're struggling with money.
It's struggling to the top side. So it ran those highs, had a strong reaction, and then let's keep seeing what happened. Boom. And you can see the speed it has. So you can see these are big moves. And then if we just keep going all the way into time, let's go all the way to current time. Look where it is now. And that's why I leave runners, because there's going to be times where a good trade like this could keep on running. Look, it's breaking more lows right now. So this trade that was originally 50 points is up. How much am I up? I think it's like 345 points. Even though I didn't hold the full position that much, so I'm only holding a small position compared to what I was originally holding. So I took majority of it off, like up here.
Yeah.
But then I left a small position just so I could see if it's going to run lower. And the thing I always recommend, Mike, when it comes down to leaving runners, even if it's a small percentage that you don't care about, it's just about the habit of getting used to leaving a percent. Just so you can always get used to holding trades longer. You can get more comfortable holding trades, because there's going to be a time where in your journey you're going to be only taking trades 1-to-1 because you're scared you're not going to be able to hit your target. You're going to be scared it's not going to go to where you think it is. But doing something like this, where when you are right, leaving a runner so that you see it actually happens, and you're going to actually be able to have trades that play out. But it comes down to being able to actually be there now and actually do that and actually experience it first. Because it's one thing for me to tell you, but once you actually, so you can see from the history, these are the trades that I've been taking. So 1,000 would be a 1%, basically for a 100K account, which is the size of the account I'm going for. But I just want to kind of go through the history. So let's look at it risk reward wise. So right here, minus 1,000, that's minus 1%. That was earlier this morning. That was the London session trade I took. It was an idea. I thought price was going to go higher. I was wrong. I took an L. Then I had another trade. It played out a little bit, but it didn't give me a good reaction. It was kind of just, it didn't look good. I just took off with just a little bit, just kind of break even. Just a little, it was a little bit above break even. But if I'm risking, say, 1,000, a $311 gain really isn't anything. So it was a break-even trade in my opinion. I just thought it was safer to be out of the trade than in the trade. And then I'd look for another trade, these two positions right here. So here, not those. Right down here, these two positions, the minus 760 and minus 80, those were part of the same trade. So it was just two split up positions equaling like 1%. It was a little bit less than a 1% loss because I cut it like right at the end. So it was a little bit less. So before New York session, I was already down 2 trades. I was already down 2 trades for the whole day before New York session. But then New York session came, and I took 1 trade. I took 2 right here, but the first one, I think I cut it early, and I changed the lot size on it.
Yeah.
So that's why this one's like real small. What's the lot size? It was NAS. I think it was just another break-even trade, honestly. So I took 2 trades. One was a break-even, like it went in profit, but then came back and stopped me break-even. Then at that point, I was like, I already took 2 losses for NAS 100, and now I'm already break-even. I just said, fuck NAS. Went to US 30, and that's when I saw the move was happening going into 930. And then that's when I was risking 1%, and I made 3.3 from that trade. So that made back both the losses plus the 1.5%. So that's why risk reward is going to be good, because even though I took 2 losses and 1 W, since the wins are bigger than the losses, it's able to make up for it. So now even though I lost that, I still made enough to risk now tomorrow for a trade. Plus I'll still have that 0.5 profit now. Right. That's why risk reward is going to be important, because even though I did all of that, those were 3 trades. If I would have lost that 3rd trade, I would have been down 3% for the day though. So it just comes with that understanding too. Like, even though that's something I necessarily shouldn't have did, because there's going to be times where like that where you necessarily shouldn't take another trade, because yes, you could take that trade and it could play out. But if you're already down 2 trades, the likelihood of being down a 3rd trade is also going to be likely. But in this time, I was confident enough in the trade and it played out.
But just because it played out doesn't necessarily mean it was the right thing to do. Because just because it worked out this time doesn't mean it's going to work out next time.